Good morning, traders. Paul here with GammaEdge. Today is Tuesday, the 28th of February, end of the month. Pause your players, read to the bottom. If you agree, hit that play button. Summary for today, we're in this transitory phase. We've got a short-term trigger up, and what that means is that the CT closed greater than the previous close. Historically, this has been a good opportunity to start increasing your long exposure. Don't get out over your skis, of course, and nothing here is a recommendation to buy or sell any security, but we'll give you some ideas. Long-term bearish, the ribbon is still inverted. This is suggestive of selling the rips, not necessarily buying the dips. So what that means is that we are prone to failure when we're in a longer term state like this, and it's going to take a lot of work for the bulls to win the battle and flip the ribbon, and it takes time. Also supportive of the bulls yesterday, market breadth. We use the 52-week new high, new low indicator from the NYSE. And it reflected a day where the 52-week new highs outpaced the new lows. This is good. We have far more of these in 2023 than we have of the opposite condition, which we've been working in with the last week or so. So this is a good change towards a slightly bullish outcome. The right goalpost, which is positive gamma exposure, remains at 4,200, and the left goalpost is at 39. We'll note in the SPX PM complex, which is the heavily traded but much smaller than the AM complex, we are seeing a tightening of these ranges, and I'll talk a little bit about that in a couple slides. Transition ranges are overlapping or coincident, and this is really powerful. When we can define these transition ranges, they really become very visual, very key areas that if we do not achieve and break through those transition ranges, you can probably play the side indicated. So just remember that. We have a lot of 0 DTE folks. We do have a slight upward bias today, but note as we go into the afternoon session, in the money puts begin to really dominate, and as everyone knows, those in-the-money puts will continue to grow their deltas towards the limit of -1 delta or -100. Today is an end-of-month expiry. We expect a lot of volume today, and when we open and close deltas, that completely swamps the boat in context of charm. So don't get out over your skis on the charm indicators today, just simply because charm is a sit on your hands, let time do its magic thing. And today is anything but a sit on your hands day. We expect a lot of volume today. Key levels, aside from the transition range of that 4,000, 4,005 range, is 4010, 4025, and then downside we're looking at 3950, 3925, and 3900, and I'll call those out as we go ahead here. Taking a look at the overall market model, spent some time last week breaking each one of these into its constituent components. This is the composite of everything. We've got a long-term indicator here, and we've got some short-term indicators here. And you can see the rounding of the short-term, and this is what's given us that rise to a new trigger day. And you can see that what we call the railroad track pattern down turned off yesterday. And so those who have been following this probably enjoyed some pretty good trades over the last 5-6 days, whatever the case may be. So hopefully you were able to participate in that. Longer term, we've got this crossover, and what this typically means is that we tend to sell the rips and buy those dips. And so what happens is that as we get further and further extended, we will play to the upside, just like what we're looking at now. But we do have every anticipation that it won't hold and that we will potentially go down. So just be aware of that. But let the market model tell you what's going on. Don't try to anticipate. Because we do have a trigger day, there are a couple stocks that I want you to take a look at. First Solar is one of them. It does have earnings after the close today. Upstart. Also take a look at that. Wait for a crossing above 1850. Target the 20 strike. And then look at, And then take a look at using the GEX ratio. Both XRT and XLC are incredibly oversold. If we get any bounce in the markets, these could participate. So go take a look at the GEX ratio on those, and you can make your determination on what to do. Taking a look at the key levels here, as I said, we had a tightening here of plus GEX and minus GEX in the PM settled complex. We are seeing the deltas move up just slightly, which is good. And this is puts being closed, calls being opened, that type of thing. And it's pretty much up and down the strike chain, so we're happy for that. Over here on the combo, which is the AM and the PM, we've got a mixed picture. So we're not racing towards a bull in any sense. I think the key takeaway is that we're not seeing a major change in any of the levels. We're kind of status quo into the end of the month, and it'll be interesting to see what occurs. Now, the expected move, which is the conservative open, high-low close estimate that we prepare for our premium sellers, are indicating a drop relative to where we've been. It's about a quarter-point drop relative to last week and where we were yesterday. So we are seeing vol come in a little bit for today, which is constructive. We might get some good upward push because of that, but we'll just have to wait and see. The PM settled complex, very tight transition range. We had a slight drop in the overall net gamma, which means less put dominance, more influence coming in from the calls, which is good. To the upside, though, with the exception of a little pocket sitting right between 40.25 and say 40.45 or 40.50, everything is pretty much put dominated, and these are in the money puts. And until we see the call speculators step up, not really going to make a major advance up towards this direction. To the downside, the OTM put speculators, all the folks are still present. We do have a couple nodes, obviously, that you can see appearing. That 39.25 and 39.65 are there. They were there yesterday, so I didn't really highlight them in the outcome here. But you can see we have some new ones appearing very much below us. We're not going anywhere down here, but we like to see, in context of these complexes, we like to see the calls below us be supportive, and then the out of the money calls going in, basically dominating the in the money puts. We're not seeing that, so we're very, very early in any type of move to the upside. Do not get out over your skis. The charm estimates, as I said, we have a slight bias to a positive delta early in the morning, but as this collapses through the day, because these are out of the money puts, are being mostly derived from the out of the money put side, the in the money put side will continue to grow. Eventually these two will be equal, and then this will collapse. Of course, it's spot price dependent, and here's that 39.25 area. Not a lot here. So where we are in the overall price, and if we bounce up against the 4,000 level or bounce down to 39.50, will increase or decrease these. So we'll just have to pay attention to that, and our movement within this range will really determine what happens. But these are really the goalposts for today, 39.50 and 4,000. We've got to really watch what's happening there. You can go play with the link here. This is a hot link, so you should be able to go key that in and move this chart around as you see fit. The 0 DTE, again, extremely tight range. You can see the gamma for the 0 DTE at the 4,000 strike is really dominant. Here's that 39.50. To the upside, we're continuing to erode the ITM puts. This is good. We like to see this because as we take puts out of the complex, it starts to create a bridge to the north, and that's good for the bulls. To the downside, it's mixed, and it continues to be mixed. We're losing in-the-money calls, which is not always great, but we're also losing out-of-the-money puts, which is good. So we're going to color this yellow for now. Make sure you understand this dynamic. This is important. In order to advance, we need to see the structures really start to turn green in gamma, or excuse me, in deltas, and we're not seeing that. So just be aware of that. Key levels for today, of course, 39.50, 39.80, 4,000. You can see what's happening there. Don't think we're going to get much above this 410, 415 zone, and certainly not anywhere near the 40.25 by the end of the day. Taking a look at the 1 DTE, couple areas that we could park, and that's because we have a delta sign flip as well as some pretty weak gamma in this area. This is all in the transition zone. We don't talk about a flip. There is no such thing as a flip, and you can see it visually right here. It's a soft spot of low gamma and low delta exposure. So anybody who talks about, a precise number for a flip is really kind of misleading what really is occurring out there. 39.50 to the downside, 40.25 on the upside. So this is tomorrow's view. What's striking about this, tomorrow's Wednesday. Wednesday generally is a stronger day. It's a fairly weak day by this presentation. So don't read a lot into this, but note that as we go into the close today, these are definite areas all the way up here at 40.25, and then the check marks all the way on down here. High candidates for parking overnight, and that is because of the low delta and low gamma exposure afforded in that overall expiry. A couple key things though, I've colored them green here. Tomorrow we're seeing almost a complete erosion of the in-the-money puts. That's really good, again, for the reasons I've already talked about. Same thing on the downside. We're seeing these out-of-the-money puts come off, and that actually is very constructive because it'll start exposing the in-the-money calls. And when we start seeing that, again, we form that foundation. We need multiple days of this to undo the damage by all the out-of-the-money put speculators. Haven't really been seeing that, so we're watchful and we're mindful of that. So just keep abreast of that. Note the transition range is a little bit wider for tomorrow. 1DT transitions, especially being weak. Sure, I mean it is what it is. Don't torture the data to tell you the story you want to hear. It is what it is. It's a weak day tomorrow. At least from today's before market open perspective, and as a result, take this part as with a grain of salt. But the overall trend is constructive. Taking a look at the mothership, the combo, which is the combination of the AM settled, which is largely institutional, or we believe is institutional, and the PM, which is largely single block trades and multi-legs, but more retail focused. We're seeing a good structure develop down below us. This is really, really positive for the bulls. We're starting to see the ceiling of that, come up, and that'll provide support. So this is pointing to this 39.25, 39.20 zone as being difficult to penetrate if we drop south. So 3,900 you can see is minus Gex here with the bubble. If we do push downward and we lose 39.50 and start pushing towards 3,900, I doubt we're going to make any significant progress below 39.25 as we get to 3,900. It's just going to be, unless the structure changes and we just start pounding this area with out of the money puts, don't see the structure supporting a rapid move down. That being said, the upper range is still bound by the in-the-money puts. The overhead, is just completely put dominated, starting at about 4,005. Now there is this little node that we want to show here at 40.30. This could be a fairly strong area that if we can break the 4,000 strike, we could capture up into this 40.25. That's a very, very strong gamma that we have there. We're watchful, we're mindful of it, we're not expecting it, if that makes sense. But it certainly is there. Again, look for the delta transitions. This is the mothership, so look at that 39.65, look at the 39.45, all these areas here, but very, very strong gamma to the downside. Not expecting that we're going to close in those areas, but just be aware anything is possible. Finally, this landscape view really kind of hits it home here. The 4,200 strike, very strong. It's getting stronger relative to yesterday. The left goalpost, 3,900, you can see. And we got this nice, almost monotonic decrease here. This is very normal with the exception of this strike here at 37. Be aware, this is an incredibly clean structure, and this is why the 4,000, 4,005 strike range is so important. It's absolutely crucial that, and it's easy to read. I mean, you guys can look at this right now, and you can see this for yourself that we're kind of bound, and we could reject off the 4,000 strike. If we can clear this and get up into this zone, it's absolutely clean sailing all the way up to the 40.65. Now, the JPM, this is the end of March, not the end of February. Today is a JPM roll, but it's minor. I haven't talked about it because it's really a nothing muffin. We're not going to see much today on the JPM stuff. This is more important in my view. And so what we want to do is if we can get and close above that 4,005, then we could get captured and start playing to the upside and start seeing the influence of charm flows, et cetera, et cetera. If we can't capture the 4,000, 4,005, I think we do play, selling the bounces and, play for another run to the downside just to see what happens here. So that's it for today. If you have questions, comments, concerns, come and join us at GammaEdge.us. Go to this link, upper right-hand corner, pricing tab, pick your plan, fill out the blanks, come on in. 14-day free trial. Been a little bit of confusion for folks joining. You're going to get a code from LaunchBot or LaunchPass. That code needs to be sent to the LaunchPass bot, which will mysteriously appear in your friends list. If you don't do that, you can't get into the Discord. It's that simple. That's the gatekeeper. We have no control over it, but we use their service. So just be aware of that. Watch your email for a code from the LaunchPass server and follow the instructions. On Twitter, follow us, GammaEdges with an S. And then here on YouTube, 2 things. If you like today's content, smash that like button. It gives me immediate feedback that I'm providing the content that you find actionable and useful. And of course, subscribe, because when you subscribe, you will get notified when Taylor, myself, and Michael post videos. We try to do 1 to 2 a day, and this hopefully will keep you on the right side of the market. So with that, I bid you farewell. Hope to see you in the Discord. Thanks.